Okay, good morning, everyone. It is Monday, October 13th, 2025. So much going on in the silver market. I wanted to jump on, give everybody an update because I've been getting hit up on my cell phone by various people, sources, asking me what's going on. This started Friday. I got Cole Keller, COO of SD Bullion, on here to also help. Basically, a little backstory. We could see this coming. We've been kind of saying, hey, something's going to be coming only because we're in meetings with some of the largest institutions at every layer of our industry. And I could see, hey, there's red flags, there's major red flags in every piece of our vertical, right? Whether you're in refining, wholesaling, minting, you could just see it. And I remember asking Cole a couple weeks ago, asking him, hey, how much longer are we going to be able to offer these silver at spot deals to the community, to the customers, because I just had a sense that like something is going on and something is going to change. And I remember Cole calling me into his office last Thursday and he said, hey, you asked, that time has now come. And then news breaks on Friday. We start getting emails from various very large dealers in our space saying that they're not buying scrap silver or junk silver. That started a panic on Friday of people calling me, asking me, am I going to be able to sell junk silver to my local coin shop? What is going on? Why is nobody buying silver? And so let's start there. I guess, why are the refineries have been backed up. Let's be clear. That's why I wasn't surprised. The refineries have been backed up for a very long time, which is kind of a multitude of a few reasons. Price going up, obviously one of the major ones, but there's other things. We're trying to keep this video a little short, so we don't want to get into everything. But why are refineries backed up? And then what happened on, I guess, Friday that was so backed up that sparked kind of basically this messaging out to the market saying, hey, we're done buying this type of silver. And what we don't know, right, Cole, is if it's going to bleed into 999 or 49's fine silver as well, and what that could do to the market.
Yeah, it's super interesting. I've been trading this stuff for a while. We haven't really seen anything like this. COVID was just, hey, people can't work, people can't ship. This is the entire backbone wing of the industry that is the financing is now just so expensive that no one can do anything. Everyone's frozen. So what refineries have had is just so much raw material. As price goes up, there's a ton of people coming in, selling to their local shops, selling to us, and sending that all off to get melted because demand was relatively low. There was nowhere to really go with it. Send it off to get melted. There's been a lot of 90% available. And that's why customers have seen premiums pretty cheap on 90%. And so the announcement, as you alluded to, Friday was there were multiple big players, the people that are buying from the three layers underneath them. So your local shop will sell to a bigger shop. So
Mhm.
the place where it all goes, they all basically said, hey, we're done. No more 90% not buying it. So that really cratered the entire 90% market in that kind of subsector. And now everyone's asking, well, why? And what does that impact on everything else? In short, the lease rates, as you alluded to, are so cost prohibitive that if you're a market participant, and pretty much the entire market is exposed to lease rates because they don't want to own the metal outright. So
Right.
they will sell it for a short term lease and are in a repo agreement. And basically, it's like any other interest charge to cost to borrow that. And those prices have gone from very little to north of 30%, which, whenever I say very little, is less than
Yeah.
1%, less than 2% typically.
Yeah, I mean, we were with the Royal Canadian Mint last week, and I remember asking them about this, and it was very interesting. They said normally lease rates are so low, it's not even something they factor into any of their finances when they're looking at
Yeah.
producing metal. And last Tuesday, when we were with them, lease rates were 12% then, and it just went up from there. Didn't you tell me it shot up to, how high did it shoot up over the weekend?
I heard over 100%.
Yeah, over
Um,
100%. So something that's like normally in the very, very tiny fraction, over 100%. And so I guess getting back into the refining side, and what we've learned is that why this is causing such an issue with refiners is because once they get the metal, most of these refiners are paying their customers a percentage up front, and then they got to refine it and they got to ship it
mhm.
overseas, right, to get their money. And while it's on that boat, they're actually I guess, hedging in a way with leases to protect themselves.
Correct.
And when
Correct.
lease rates are this high, now the refiners cannot turn a profit. And so therefore they have to stop taking it in.
Correct. Yeah, the refiners don't want to take an outright position. If they just buy it and do nothing else, then they're taking a position. They don't really want to do that. So then they will use lease facilities, basically put the metal in a repo and then get money for it. Okay, great. But for a bank to put that money up, they're then leasing it to you and they're going to charge you a percentage. And that's where all this rubber starts to really hit the road. That is just being charged at a much, much, much higher rate, to where if you're taking a position, then you're going to be paying 30 cents a day on an ounce of silver, something crazy. So to address this, the big question is how long does this last, and we'll get into all that. But that's really the mechanics, and so people are having to short-term borrow and they're having to pay an interest rate on the silver, and that interest rate is just super expensive, like any other interest rate that anyone watching this is familiar with in their own lives. If that goes up a super high amount, then you just can't afford it, and then you're sitting there wondering, what can we even do?
Yeah. Yeah. I've been asking people like, imagine you're paying 8% to lease your car and in over, 48 hours, it goes up to 800%. Are you still wanting to make that car payment? And that's we'll get into the other side of the business with the sovereign mints. I mean, that's what they're faced with on producing metal. But going back to the buying side real quick, I just want to be clear. It's not like the market's not buying junk silver. It's only some entities that have a specific business model, because there's still a lot of people like SD Bullion that are putting bids out for
Mm-hmm.
junk silver. Now, I will caveat that with the fact that, yes, people like SD Bullion cannot buy all the silver in the world tomorrow, right? That's impossible. So if this continues to last and go down the road longer, then yes, there could be a point to where there's so much pressure on the entities that can and are buying that creates another problem, right? And of course, as always, we're in a physical market. These always show up in price, right? So either your bid's going to go
Exactly.
down to a point to where you don't want to sell anymore, but there's it's not like nobody's buying
No, you're
junk
you're
silver.
you're spot on. It does just come out in price or premium. So while there were three announcements on Friday from major players saying we're just not going to buy any of this material, one of them actually sent an update this morning. It's Monday morning, saying, "Well, we'll take some, but it's going to be at a much much cheaper premium than you would have maybe thought." So
Yeah,
everyone's
exactly.
trying to find a way to make it work, but it provides a ton of kind of weird kinks in terms of price and supply in the market. And the question is, when can lease rates really normalize? And there's no real end in sight.
Yeah. Well, and I guess I should say too, like scrap silver. Scrap silver is different than junk silver. People like us aren't retailing scrap. When I say scrap, it's mainly the sterling silver. Jewelry is completely different. That stuff's really hard to refine. So local coin shops probably, if I'm guessing, are not able to buy scrap
Mm-mm.
like silver jewelry right now because there's really no outlet for it.
Mm-hmm.
Silverware probably in a very similar boat, although SD Bullion was selling sterling silverware on our website during COVID, and people were happy to buy it because that was the only silver that anybody could find. So who knows? Maybe we'll see that again. That happened on Friday. Over the weekend, there was a divergence that I saw between the futures price and what I call the physical price of silver, almost at $3 an ounce. That's kind of regulated a little bit. We'll get into that. But Monday morning, I woke up to people asking me, hey, so Friday was like, why is nobody buying silver? Monday morning, it's like, hey, why are no sovereign mints? Why is nobody making any new silver? Right? And it goes back to how things have escalated so quickly with these lease rates and what the cost is to these players to create metal. And it either they have the option to play the game of trying to keep their premiums. It always ends up in price, right? It's a physical market. So if you want to buy a silver maple leaf at $30 over spot, they'll be happy to sell it to you. I don't think the market's ready for that. Could If things don't normalize, is that where we're going to see ourselves in the next 6 months? It's possible because I remember asking the Royal Canadian Mint saying, hey, now keep in mind, gold has normalized, right? Since it shot up in January. We had similar issues with gold, and earlier this year it has normalized. But I did ask them, hey, has this gone on longer than you've expected it? And they're like, yes, it definitely has gone on longer than anybody expected it. So we don't really know. But I guess to get into it with all the messaging I'm receiving this morning is so we've got the buy side, people selling it to the market. What is going on the physical side of new inventory coming, new silver inventory coming into the market, and why is there such a supply crunch there?
Yeah, in short, prices are going up. The cost to produce are whatever price that you would normally have to get a new silver maple produced are now much more expensive because the mints are not sitting on an endless supply of metal. They have to lease it for a period of a couple of weeks while they go make it. And now that cost is higher. So we had notification from a couple sovereign mints this morning that their premium into the market on silver bullion is going up materially. So we're going to continue to see that. And then the other element is that these sovereign mints don't really operate a trading desk. They're just producers.
Yeah,
So there's this divergence in spot. There's two separate spots in the marketplace, depending on who you call and what you're trying to buy, which is really crazy from a trading perspective. But if you're buying from an outfit that gets their price off the London fix and that is trading at a significant premium, a couple dollars an ounce premium to what the future spot is, which is trading at a discount, well, you're going to be paying the London price just for spot. And you could call and buy a different product from a different desk and get a spot that's $2 cheaper. So what we're seeing is people are producing, but it's really expensive for them to do it right now. In the short term, they're trying to figure out what their opportunity is in the market and what demand looks like because we've seen an uptick in silver demand. I mean, just this weekend was crazy.
yeah.
We saw quite a few orders. Maybe up 5-6x. So how far does this go? Well, if demand keeps up, then the physical segments that we've kind of talked about, the kinks, they'll work themselves out, but it's setting up for kind of a coil and bounce in terms of overall price.
Yeah, one of the things I told you I think is fascinating to me because what people have to realize is as silver lease rates have been creeping up over the past several weeks, that means all these producers have been reducing the amount of inventory on their shelf, right? Because there
Mm-hmm.
hasn't been that much retail demand. And we're not even close to the level of demand that we were seeing like when Silicon Valley Bank collapsed in 2023. But yeah, just a little uptick. And we're still seeing a lot of sellers too, right? So you have a pretty
Yeah.
healthy two-way market now that we got demand. But just that little uptick in silver demand has completely uprooted the physical inventory that's available from a new producer's standpoint. And it just
Mm-hmm.
always reminds you of like why you have to be positioned before these types of things happen and just how we always talk about how few people own physical, how small the physical. I was listening to somebody the other day talk about how small the physical silver market is compared to gold. And whenever that turns on, when that demand turns on from the retail public, there's never enough physical to meet that demand. So that leads me kind of to my next question. Obviously, premiums are going to go higher. It's obvious. What are we seeing? Retail people are still coming, like you said, over the weekend. People are seeing the news headlines of $50 an ounce. Our phones are ringing off the hook. People wanting to sell. Uh, what do you expect to happen, I guess, on the secondary market that doesn't have to do with new production silver?
Yeah, well, first it kind of comes down to what spot are you going to be going off of? People are
Mm,
arguing about that on every trading call, and there's this standoff, like an old Wild West film, if you will. Guys with guns at the hip pointing at each other, like, what spot are you going to pick? So there's been really not that much secondary market material available in the last couple of weeks. We've predicted this, as you said. We told everyone these deals in the short term, going back from June, July, August, these are a little too good to be true, but get them while they're available. Um, some sovereign mints are already done with production for the year, and they've kind of baked that into their plans. So, the U.S. mint producing the Silver Eagle, I don't think they've made quite 10 million ounces this year. That's a light
yeah,
year in
yeah.
terms of total ounces. We're going to see people continue to transition towards whatever it is they have planned on their books in terms of, I got a product launch and we're changing from 2025 to 2026 on this date. And that all usually happens around this time of year. So, there's just going to be really not that much new material available. And the secondary material, is going to be relatively dried out too. So we're going to see premiums over the next month or two maybe bounce up to where they're 10% a spot, where they were at 0% a spot.
Wow.
And if we continue to see, I mean, if this lease rate thing, the big monkey in the room, if you will, with that, or elephant in the room is the proper analogy. There's all this tariff concern. The lease
That's
rates
right.
aren't fixing
Yeah.
themselves because, yeah,
Yeah, let's talk. Yeah, sorry, we haven't talked about that. But that's a major point. So there's a lot of issues right now in the physical silver getting to London. Number one, and now they are flying it because they're so desperate, right? But normally it
yeah,
goes by boat. But you also have Diwali happening in India this week, and that's moving a significant
huge market.
amount of
Yeah,
silver there, right? So you have all this demand for silver, and then you have players that are in the U.S. market that can help solve this problem. But there's a tariff concern, right? Go ahead and talk about that.
yeah. So to fix the lease rate issue, it's simple. Put silver in London.
Yep.
So therefore, I got to, like you said, fly it, which is very expensive, or I put it on a boat. Boats don't get there overnight. It takes a couple weeks. So let's say this issue gets solved within a couple weeks, at best case scenario. Maybe, but there's, I believe, now this is October 13th, whenever we're doing this. I believe later this week, there's expected to be some additional news for potential tariffs on material coming or anything coming out of the UK and other parts of Europe. So the major players that are usually in charge of moving all the material over there and from a banking perspective, hedge fund perspective, making all the profit, they're really unwilling to do it because all of a sudden, what happens if that costs you 25% more to bring that back, which is, of course, how tariffs work. So there's this kind of alligator arms approach on how willing are people to, in the short term, really fix this problem.
Yeah.
And it's just potentially way too expensive to do it. So they're holding off.
Yeah, so effectively, you have these players that would love to send silver over there right now to lease out at these lease rates, but what they don't know is when the silver comes back to them, if there's going to be faced a 20, 25, 30% tariff. They're waiting on that ruling. So you have that wrinkle in the market as well.
Yeah.
So in summation, you have extremely high lease rates, which is clogging up the major parts of our industry, right? We're still operating in kind of a normal market for now. I think that's going to change pretty quickly, as it always does. But you have this tariff situation, you have lease rates. We do see retail demand coming into the market, but you have demand worldwide for silver. It's not just the U.S. market. It's everybody in the world is wanting silver. Uh, as gold gets more unaffordable, they're moving into silver. So we kind of see this perfect storm. It's kind of been on the horizon. We've been looking at it for months now, going like, well, something major is coming. You just can't know what, and it's kind of playing out in front of our eyes. So at this point, I think it's kind of unpredictable, right? It's all kind of dependent on the lease rate of what's going to happen. And in the short term, I'm expecting just mass chaos and volatility until it until it regulates itself. I mean, you can just
Yeah.
see the markets up 5%, down 4%,
Well,
up
by the time
7%.
by the time people figure out, people that have been following these markets for a while, by the time they figure out what is likely to be the truth in the short term, the impact, if you will, all the material is going to be gone because now you have major news outlets talking about gold and silver,
Yeah,
and that wave of stuff hasn't even touched us yet. Where people are
right.
coming in completely agnostic, they just saw a report or they talked to financial advisors are never recommending precious metals, although they have been
Yeah,
recently,
not
right?
yet,
We've
but
talked
yeah.
about
Yeah,
that as a part of your portfolio. But what happens whenever they come in? Well, they're not as used to premiums. They'll just take whatever's available at
right.
whatever premium it's available. So, say things settle 6 weeks from now, well, okay, but the material is going to be kind of gone. And the other interesting kind of element here as we look down the road with this huge backwardation gap in price, there are a bunch of silver shorts against it. Whenever this lease situation solves itself and those prices kind of come closer together, uh, how big of a short squeeze are we going to have? Because there's
Mhm.
all of a sudden, if silver futures bump back up as this problem gets solved to the tune of $1.50, $2 an ounce, well, there's all these shorts against it. There's going to be a massive squeeze, and we know what that looks like for price.
Yeah,
So it'll be very interesting.
yeah. Okay, my friend, thank you for your time. Get back to work and good luck out there today.
Yeah.